CNBC TV18, embarking on a quarter century of excellence.
Wall Street gains for the fourth straight session after inflation for November meets estimates. Investors now await the Fed rate decision tonight. The central bank is expected to hold rates steady, but commentary on rate action going ahead will be keenly watched out for. Stocks in the Asia-Pacific trade mixed despite a strong handover from Wall Street. The GIFT Nifty is indicating a higher start for the Indian market. Crude corrects nearly 4% as an inline US CPI print sparks fears of inflation impacting demand. Brent trades around $73 a barrel. WTI slips below $70. Inflation in November accelerates to 5.5% but remains below estimates. Food inflation at 8.7% is still a concern. Industrial output also picks up pace with nearly 12% growth in October. Sources say Bain Capital will sell about 3.3 crore shares or 1.1% equity in Axis Bank via block deal today. Concerns rise for Laurus Labs as the company's Visakhapatnam facility receives 5 observations from the US FDA. Good morning in the Mumbai News Center. I'm Sonal Bhutra. You're watching Power Breakfast. Those are the top headlines. And of course, the macro cues in the US and in our own markets, they take center stage. But before we discuss those in detail, let's take a look at what the Asian markets are doing. Well, it was a good handover from Wall Street that we got. And we have a mixed picture in the Asian markets. While Hang Seng is sitting with cuts of around 0.6%, it's a Nikkei which is doing well, 0.5% higher there. The Taiwanese index is up around 0.2%. We also have Straits, which is in the green right now. But yes, something like a Shanghai and Kospi are in the red. So it's a split screen right now as far as the Asian markets are concerned. But GIFT Nifty, that will come up for you on the screen. And that one is indicating that the start for our own markets could be in the green. The implied open is suggesting a 46-point uptick for the Indian markets. Let's talk about the US markets now. Wall Street ended higher on Tuesday with the S&P climbing to its highest intraday level since January 2022. Dow Jones was up 170 points, while the S&P gained 0.5%. The tech-heavy Nasdaq gained 0.7%. And on the data front, retail inflation for November rose 3.1% on a YOY basis and 0.1% month over month. Excluding volatile food and energy prices, the core CPI increased 0.3% versus month ago and 4% from a year ago. And the two-day FOMC meeting began yesterday. Respondents to the CNBC Fed survey see the Federal Reserve beginning rate cuts next year. CNBC's Steve Leisman has more details on this.
Rate cuts and a soft landing are increasingly in the forecast, and so is S&P 5,000. Just none of it's going to happen, perhaps as soon as the market wants. Maybe a couple years for that S&P 5,000. Here's the forecast of this. I want to call them this equity curmudgeon group. You can see 4187. So not so great for this year. 4593 now. And then you go and you look at what happens. It goes up to 5,000 or above 5,000 by December 2025. So that's just an 8% gain over those 2 years. This group generally negative on equities. Barry Knapp, managing partner at Irish Times Macroeconomics, says equities are expecting a V-shaped earnings recovery, an outcome that is unlikely with contracting bank credit. Relative to a soft landing outcome, which, by the way, the percentage went up in this survey, 47% say the market's overpriced, 27% say it's priced correctly, and 24% say underpriced. That's about as optimistic as this group ever gets. But take a look. If there's a recession, 91% believe that stocks are overpriced. Looking at Fed expectations, 100% say the Fed will leave rates unchanged this week. 53%, that's where we get our first percentage above 50%. Say that first cut comes in June 2024, moves up to 69% for July. Not as optimistic or as quick, perhaps, as the futures market is. And there's that 453 year-end rate for the funds in 2024. Again, that's above where the market is, looking for about 85 basis points of cuts, not 120. And first time we're asking about QT or ending QT in quite a while. November 2024 is the average, but that hides a lot of dispersion here. Respondents are actually all over the place on that. Quickly on today's inflation number, didn't negate the bullish case for rate cuts next year, just perhaps pushed it off in terms of a near or nearest term cut, making the forecast here for June today a bit more plausible. And as you know, we're going to go back and forth as that data come in as to when that first cut might happen.
Okay, all right, Steve, thank you so much for joining us with all those details and expectations from the FOMC outcome. Let's also listen into Paul McKelly, who's the former chief economist of PIMCO, talking about the inflation numbers, its probable impact on the Fed decision.
Disinflation is well in train. The big lagging indicator has been homeowners equivalent rent. We got a really positive rent last month. We gave it back this month. So that's the really sticky component. But logic says it should be coming down as the new year progresses. It's lags, but it will be coming down. Sometimes I feel like I put out the landing lights for Amelia Earhart on this thing. But I think it is coming down, and the Fed is finished tightening. That's the big issue. The debate now is all about the timing and the magnitude of the easing cycle to come.
All right, that's the global market action and what's happening in global markets. But how will these overnight cues impact our own markets? We have a research team joining in to tell you just that, the trade setup, the stocks that are likely to be in the news, and the action from the FNO space as well. Well, let me go across to Vivek first up. Vivek, what is the market setup looking like today?
Well, good morning. Quite a few important events stacked up today, and that's what will keep markets on tenterhook. Remember, yesterday U.S. markets continued to upmove for the fourth straight session after the CPI data coming in over there as well. But today, the most important event is that late night for us will be the outcome of the FOMC meeting, and that will be something that markets worldwide would be looking at. Now, talking about the commodity market, especially crude oil prices further significantly softened last evening. So Brent futures yesterday down over 3.5%, now trading closer to the $73 a barrel mark. Now, talking about Indian markets, how did they fare in yesterday's trading session? Largely range-bound session where you did see some correction coming in, and what's actually happened is that the Nifty Bank, the mid-cap index, small-cap index, all of the markets, actually saw a decline in yesterday's trading session, and all of them were in tandem. And yesterday, what we also witnessed was the fact was that the advanced decline ratio was actually in favor of the declines. Some significant stocks, that were on the radar, Canfin Homes saw significant volatility. PI Industries, amongst the mid-cap space, a stock that tanked significantly. So these are some of the stocks that will continue to remain in focus today as well. What are the key events to keep an eye out for today? Two important IPOs coming in India, Shelter Finance, DOMS Industries, both of them looking to raise up to 1,200 crores. Also large block in the form of Axis Bank, Indian Bank QIP, and at this point of time, Asian markets, GIFT Nifty indicating a very flat start for our own markets today.
Okay, all right. So that is the update as far as the outlook on the markets today is concerned. Let's go over to Upasna. She will list out the stocks to watch out for in today's trading session. Upasna.
Well, a couple of stocks on our radar today. First up is Axis Bank, according to sources. There's a change in equity of almost 1.1%, and Bain Capital is likely to be the seller. Next up is Indian Bank. The QIP is launched of almost 4,000 crores at 414 per share, which is at a discount of 9.9% to the current market price. Next up is Shilpa Medicare. The Bangalore unit has received approval from TGA Australia for manufacturing and testing of medical oral mouth-dissolving films. Next up is Laurus Labs. The Visakhapatnam unit has received 5 observations from US FDA. Next is SRF. 2 out of 4 plants have been commissioned and capitalized at an aggregate cost of 225 crores. Next up is Z Entertainment. On back of a block deal, Plutus Wealth Management has bought nearly 1% stake at 292 per share. And lastly, Mankind Pharma. BEIGE has sold nearly 4.5% stake at 1,832 per share, while Kotak Mutual Fund has bought nearly 0.5% stake at 1,832 per share.
Okay, all right, Upasna, thank you so much for joining us with those details. And finally, Nigel is joining in with all the cues from the FNO space. Hey, Nigel.
Good morning, Sonal. We have been mentioning this part that, in fact, the markets from being net short, that's the FIs, they become net long. So the entire focus now is on cash market buying. Even in yesterday's trading session, we ended lower, but the FIs, they added massive long positions and they covered some shorts as well, which brings the short position to around 40% odd. I'll tell you what, we seem to be missing those FI shorts because yesterday as well, institutions between them, DI and FI put it together, they bought close to around 2,000 crores approximately. And now the FIs are net long at around 50,000 contracts odd. So we're missing the shorts in the system. In fact, when we were not getting, these kind of flows, the markets were moving up because the shorts were getting squeezed out. Now, in fact, we're net long from the FI perspective. And if you pull up the 1 week chart as well, that'll tell you the picture. Because we hit this 20,850 a few sessions ago. The FIs became net long at that point of time, and from there, actually, we haven't moved much. We had around 20,900. So last 4 sessions, we have actually moved not too much, 50, 80 points approximately. Let's run you through the options data, since today is the Nifty bank expiry that will play out, the weekly expiry. 47,200, 47,300 call, both of them saw a fair bit of writing, which brings us to the level. I think that 47,500 mark is going to be a bit of a resistance. And I say that because of the options data that we pulled up for you on the screen. And also the highest open interest on the call side is at 47,500. The downside support around 46,500, or you don't want that level to break decisively. On the Nifty, 21,050, that becomes a bit of a resistance zone. While on the downside, the 20,700 to 20,850 is very, very crucial. We have gone to 20,850 quite a few times in the last 1 week or so. So you want that level to hold out. The gift Nifty, I think, is suggesting some green to kickstart trade. I think the markets will, consolidate a little bit, maybe, in fact, wait to hear what the Fed has to say. And then I think still we continue our upward trajectory. Back to you.
Okay, all right. That is the trade setup and the power prep segment. With that, we'll slip into a break. When we return, we get to the highlights of the domestic inflation data in November, industrial production print in October. So stay tuned for that analysis.
CNBC TV18, embarking on a quarter-century of excellence. CNBC TV18, embarking on a quarter-century of excellence.
Welcome back. It's time to focus on some domestic macro cues now. Retail inflation in November accelerated to 5.5%, but this was well below the CNBC TV18's estimate of 6%. Meanwhile, industrial output also picked up pace in October with a growth of nearly 12%. Latha Venkatesh is here with more on the inflation and IIP data.
Yes, it is a Goldilocks scenario with the growth number coming higher than expected for October industrial output and inflation number coming lower than expected for the November CPI number. Inflation is more important, CPI, because it is the index which the MPC tracks. And here the news is very good. Expectation of 6% and the actual number coming 45 basis lower at 5.55. But first, let me give you a bit of the bad news. Underneath this is a food inflation, which is a bit scary at 8.7%. It has been propelled by 3 factors which also were bad in the October data on CPI. The first one is vegetables. Vegetables are up 17.7%. We thought we had quelled the tomato inflation. We now have an onion and tomato inflation taking the year-on-year growth to 17.7%, and even month-on-month, vegetables are up 5%. The other nasty contributor is pulses. Pulses are up 20% year-on-year. That's significant considering that, in a country which has a large vegetarian population, it's the sole source of protein. And therefore, this is, a cause of bother for the government and for the policymakers. The other nasty element has been cereals and fruit. Fruit is the new addition. Cereals remain at over 10% year-on-year. And fruit, which was up 9% last month, is up now 10.95% year-on-year, almost 11%. So these are the 4 contributors. None of them are going away in a hurry. Vegetables may decline as we come to December, but no such luck when it comes to pulses. The Rabi acreage is actually lower than last year, and therefore we have to worry that the food inflation is going to be with us for some time. But the headline inflation is unlikely to breach the Reserve Bank's full-year target of 5.4. So as far as the bond markets are concerned, you can breathe a bit easy about the RBI's action. Growth numbers very good at 11.7% October industrial output, and supporting it is actually across the board. Electricity is up 20%, manufacturing is also up significantly. The only thing we need to remember is that the base was very poor. It was minus 4.1 industrial output in October of 22, and therefore this 11.7% is good, but it gives a 2-year CAGR of probably under 5-6%. It's not very significant. However, components like electricity have done very well. The other component that definitely merits being mentioned is that consumer durables and non-durables have done very well.
Okay, all right, Lata. Thank you so much for joining us with your take on that macro data. With that, we'll slip into another break. Up next, we'll get you all the cues from the commodities market, so stay tuned for that.
CNBC TV18, embarking on a quarter century of excellence. CNBC TV18, embarking on a quarter century of excellence.
Welcome back. It's time to talk about commodities now. There's been a big fall in crude oil prices overnight. Manisha Gupta is joining us with all the update. Hey, Manisha, good morning.
Hey, morning, and thank you for that. Well, we have seen 3 to 4% of a cut come in for both the crude varieties, and with that, the crude oil prices are now trading at a 6-month lows. Well, the U.S. inflation rise has bolstered views that it will not, the U.S. Fed will not cut rates at least in the first quarter of 2024. The markets also are looking at the U.S. Fed meeting decision today, and in the meanwhile, there are doubts that OPEC and allies will be able to offset the oversupply. The markets also are reading into the EIA monthly report, which says that the U.S. output would be at a record highs in the next year at 13.11 million barrels. Also, the EIA has cut the Brent 2024 forecast down by $10 to 83, and that really seems to be impacting. I mean, we're already dealing with reports on how the Asian consumption has been lower, and Saudi Arabia is cutting official prices here. So everywhere that you look, there's a bit of a pressure continuing into the market, and 70 clearly continuing to be a resistance for the WTI crude prices.
Okay, all right, take that point. Thank you so much, Manisha, for joining us. That's all about the commodity markets. But moving on to some political updates now. The BJP has chosen Bhajan Lal Sharma as the next Chief Minister of Rajasthan. Senior party leaders, including Defence Minister Rajnath Singh, attended a meeting of the newly elected representatives in Jaipur last afternoon. Bhajan Lal Sharma was elected from Sanganer constituency, which is in Jaipur district. Meanwhile, the party also named Diya Singh and Prem Chand Bairwa as the 2 deputy chief ministers of the state. Meanwhile, the Chief Minister-elects for both the state of Madhya Pradesh and Chhattisgarh will be taking oath today. Mohan Yadav will be sworn in as the MP's Chief Minister at 12 noon, while Vishnu Dev Sai will take oath as Chhattisgarh's Chief Minister at 2 p.m. Prime Minister Narendra Modi will be in attendance for both the ceremonies. And in some international news now, the United Nations General Assembly has overwhelmingly called for a ceasefire in Gaza, with 153 nations, including India, voting in favor of the resolution, which demands an immediate humanitarian ceasefire, the release of hostages, and access for humanitarian aid in Gaza. 10 nations sided with the United States and Israel, while 23 nations abstained from voting. India's permanent representative to the UN, Ruchira Kamboj, also said that the endeavor was to find a peaceful and lasting two-state solution to the long-standing Palestine question. And with that, it's curtains down on this edition of Power Breakfast, but do stay tuned. Bazaar Morning Call comes up next with all the action.
CNBC TV18, embarking on a quarter century of excellence.